Hello and a very good morning. You're right here on News 9 Live, and over the next 30 minutes, all the top stories from around the world that will impact your business, the economy and stock markets. Stay with us right here on World Business Report. You're watching World Business Report. I'm Karthik Malhotra, and the top story we are following today: 3 US servicemen were killed and dozens feared wounded after an unmanned aerial drone attack on US forces stationed in northeastern Jordan near the Syrian border. US President Joe Biden has blamed Iran-backed groups for the attack, the first deadly strike against US forces since the Israel-Hamas war erupted in October. In an address to the nation, President Joe Biden said that his country is pledging a swift and decisive response to the incident. The somber moment underscores the sacrifices made by military personnel and raises questions about the broader geopolitical implications. Listen into what Joe Biden had to say.
I want to point out that we had a tough day last night in the Middle East. We lost 3 brave souls in an attack on one of our bases.
Yes.
And I'd ask you for a moment of silence for all 3 of those fallen soldiers.
Jesus.
And we shall respond. God bless you all. Thank you for allowing me to be here. And I wish we didn't have to go. Thank you all so very, very much.
US President Joe Biden saying that the country will respond to the action. Well, moving on, but staying with the Red Sea area, Yemen's Houthi rebels on Friday stepped up attacks on vessels transiting the Red Sea, including a hit that sparked a fire on a fuel tanker operated on behalf of trading firm Trafigura. Trafigura said a missile struck the fuel tanker Marlin Launda as it transited the Red Sea in the Gulf of Aden region. The tanker was carrying Russian naphtha purchased below the price cap in line with G7 sanctions, a Trafigura spokesperson said. Reports from both the United Kingdom Maritime Trade Operations and the British maritime security firm Ambri indicate multiple vessels being struck in the Red Sea near Yemen's Aden, with onboard fires reported. The situation raises alarm bells about the safety of maritime traffic in the region. The Houthi military spokesperson claimed responsibility for the operation, specifying that their naval forces targeted the British tanker Marlin Launda in the Gulf of Aden, resulting in the outbreak of a fire. All right, and moving on to the US, SpaceX has deployed a batch of Starlink internet satellites into the orbit using its reliable Falcon 9 rocket. The launch took place from NASA's Kennedy Space Center and aimed to add 23 new satellites to the growing Starlink constellation in low Earth orbit. The Falcon first stage booster, with an impressive track record of 17 prior flights, including the AX-1 launch in April of 2022, was used for this mission. In a demonstration of SpaceX's reusability efforts, the booster made a precise landing on the drone ship, a short fall of gravitas in the Atlantic Ocean. Another Falcon 9 will carry 22 more Starlink skyward from Vandenberg Space Force Base in California during a nearly 4-hour window. The Falcon 9's first stage comeback to Earth in Florida about 8.5 minutes after liftoff from a landing on the SpaceX drone ship, which was stationed at sea. It was the 18th launch and landing for the booster flying from Kennedy Space Center and will be the 9th for the one launching from Vandenberg, according to SpaceX. The company's reuse record is 19 launches set by a Falcon 9 just last month. And staying with Elon Musk, who of course owns Starlink as well as the Falcon 9 with his SpaceX programs. Now, in a new development, Bernard Arnault, the billionaire chairman and CEO of global luxury goods company LVMH, that includes brands like Louis Vuitton, is now the richest man in the world, overtaking Elon Musk. According to Forbes magazine, Arnault and his family's net worth soared to $207.8 billion after a $23.6 billion increase on Friday. On the other hand, the net worth of Tesla's CEO stood at $204.5 billion. The market cap of LVMH reached $388.8 billion on Friday compared to Tesla's $586.14 billion market cap. Recently, LVMH posted a 10% rise in fourth quarter sales driven by resilient demand, including from Chinese buyers for its high-end fashion. Sales at the world's biggest luxury group, which owns labels including Louis Vuitton, Dior and Tiffany, came to nearly 24 billion euros or $26 billion in the final 3 months of the year. Take a look at this Reuters report.
LVMH shares were up over 9% in early Paris trade on Friday. That followed some better than expected numbers in the French luxury giant's latest quarterly report a day earlier. The figures lifted peers including Hermès, Kering and Pernod Ricard by 3% or more. LVMH, which owns labels including Louis Vuitton and Dior, posted a 10% rise in Q4 sales on Thursday, hitting $26 billion. The company's analyst-beating growth was driven by continued demand for high-end fashion, including from Chinese buyers. It offered reassurance to investors over the luxury industry's resilience in the face of economic headwinds and slowing demand after a lengthy spending splurge that fueled stellar sales following the global health crisis. Investors had become skittish about the industry's prospects after the conglomerate's October report showed sales growth had slowed to 9%. That was after a long spell of routinely outpacing expectations with strong double-digit growth. An analyst said the new report should be enough to, quote, steady nerves in the near term. The group proposed a dividend of €13 per share, up from €12 a year ago. And it forecast continued growth next year, despite an uncertain macroeconomic and geopolitical context.
Moving to news from the media and entertainment space, and this one impacting India. Walt Disney's India unit is being valued at less than half of what it hoped for in the proposed merger with Indian billionaire Mukesh Ambani's media business. After weeks of negotiations following a non-binding pact with Ambani's Reliance Industries to merge their entertainment businesses, Disney's India assets are valued at $4.5 billion, less than the estimated $10 billion which the US entertainment giant has previously pursued. The lower than expected figure is also due in part to the write-off of revenue originally to Disney from its sale of cricket TV rights to embattled Zee Entertainment, which is now expected to be unable to pay up. No final decision has been made on the deal and its terms, and either party can still call off the transaction according to reports. The combined entity will be valued at $11 billion, with Disney taking about 40% stake. Reliance will have a 51% stake, with the rest held by James Murdoch's Lupa Systems. The two companies aim to sign a binding deal in February. And moving back to the US, Treasury Secretary Janet Yellen asserts that the economic policies under the Biden administration, often dubbed as Bidenomics, are delivering tangible benefits for the middle class in the US. With a focus on economic inclusivity, Janet Yellen highlights key indicators pointing to a positive trajectory for the nation's economic backbone. Take a listen in. Treasury Secretary Janet Yellen there saying that Bidenomics seems to be working for the US administration, which is up for elections in the month of November. Remember, the primaries are already on, and from all counts, it seems that former US President, the Republican frontrunner Donald Trump, is likely to make a comeback in the race for the Oval Office due in November 2024. And as the Federal Reserve gears up for a crucial meeting, the latest data reveals a notable downward trend in US inflation. The Commerce Department's Personal Consumption Expenditures Price Index, the Fed's preferred inflation gauge, shows prices in December ticked by a mere 0.2%, in line with economists' expectations.
U.S. inflation continues to trend lower, according to a closely watched report out Friday. That's not only good news for consumers, but underscores the case that the Federal Reserve could begin cutting interest rates this year. And it comes at a crucial time. The Fed meets next week to discuss when rates might begin to come down. The Commerce Department's Personal Consumption Expenditures Price Index, the Fed's preferred inflation gauge, showed prices in December ticked up a mere 0.2%, in line with economists' expectations. Prices for all of 2023 increased by 2.6%. That's a significant drop from 2022, when they rose by more than twice that. The so-called core PCE, which strips out volatile food and energy prices, rose a modest 2.9% last year, the smallest advance since early 2021. Cooling inflation has bolstered expectations that the Federal Reserve could start cutting rates as soon as March. The timing of the first rate cut, however, is uncertain, as the job market and consumer spending remain strong. Financial markets have pushed the odds of the Fed's first rate cut to later in the spring in a nod to the economy's continued resilience. The central bank is expected to leave its rates unchanged at its meeting next week.
All right, the U.S. Fed Reserve is going to meet next week. But before looking ahead to the week, let's look back, and from the case of missing U.S. recession to why Elon Musk had a warning for investors. Here's a roundup of the big stories in business and finance over the past week. Take a look.
From the US recession that never was to a costly warning from Elon Musk, this is the week in numbers. 2.5% was the growth in the US economy over last year, shrugging off dire forecasts of a recession. Expansion ran even faster in the final quarter as inflation pressures eased. Treasury Secretary Janet Yellen says it's a victory for the president's economic policies.
The recovery is so strong and so widely shared because Bidenomics is not just about a post-pandemic rebound in demand. We've also focused on unsnarling supply chains and bringing more Americans into the labor force, which increases supply.
$80 billion was the plunge in Tesla's market value after boss Elon Musk warned that sales growth would slow. The billionaire said the dip would come as the firm focuses on a new, cheaper model set to debut next year. He also warned that ramping up output of the new car would be tough due to the cutting-edge technology involved. 13.1 million is how many subscribers Netflix added over the fourth quarter, a record for the period. It credited hit shows like The Crown, with one analyst saying it was clear the firm had won the streaming wars. About $9.7 billion is the fine imposed by Brazil on mining companies Vale and BHP and their joint venture Samarco. That's over a 2015 dam collapse that killed 19 people. The companies can still appeal the decision. And $3 trillion is now the value of Microsoft. It crossed that threshold for the first time on Wednesday, but it still didn't quite catch Apple for the title of world's most valuable company. The gains came as US stocks soared to record highs one session after the other.
All right, those were the numbers that emerged from global news last week, especially in the realm of business and economy. But what is the week ahead in store for us? Now, let's take a look. From the U.S. Treasury announcements to the Fed's first January meeting, here are some key highlights. Take a look.
From the Fed's first meeting of the year to China's economic woes, here are the stories to watch in business and finance. The Fed is expected to leave rates unchanged at its end of January meeting. Signs that it might hold rates higher for slightly longer could give a tailwind to some of the moves the rates rethink has unleashed, such as a rebound in Treasury yields and the dollar. Markets will watch the U.S. Treasury's announcements on Monday and Wednesday. The U.S. non-farm payrolls report is out on Friday. The Bank of England is expected to keep rates steady on Thursday, but signal rates may not stay at their 16-year high for much longer. The pound has done well out of expectations the BOE might move more slowly on rate cuts than the Fed. Investors are also wary ahead of the ruling Conservatives' March budget. Cutting taxes too generously could hurt sterling. The release of China's official PMI data on Wednesday could bolster the case that some serious repair work is needed on the world's second biggest economy. While China narrowly surpassed last year's 5% growth target, analysts are skeptical that trend can be sustained. PMI figures from elsewhere in the region, South Korea, Thailand, and India also scattered the data calendar. Reports are due from Apple, Microsoft, Alphabet, Amazon, and Meta platforms, 5 of the Magnificent 7 stocks that helped lift the S&P 500 to a new record high in January. Those results will be crucial in determining whether the index can maintain its momentum. According to LSEG data, S&P 500 companies are on track to post a 4.5% rise in Q4 earnings compared to the year-ago period. Markets are focused on whether corporate earnings will indeed be rosier in 2024.
All right, markets expected to move on account of corporate earnings. So let's look at the markets. The S&P 500 ended a 5-session streak of record highs, with Intel slumping after a bleak revenue forecast, while the U.S. economic data showed inflation moderating. Here's more.
The S&P 500's streak of record highs came to an end on Friday after fresh economic data showed inflation moderating. The Dow added more than 0.1%, the S&P 500 dipped marginally, and the Nasdaq shed more than 0.3%. Key inflation data from the Commerce Department showed that while prices in December rose moderately, inflation is continuing to ease, with the annual uptick below 3% for a third straight month. Bill Fitzpatrick is portfolio manager at Logan Capital Management.
The stock market reaction today is likely in response to the inflation numbers, that personal consumption expenditure number, which was very favorable. It showed that inflation is coming down, and it would support the notion that the Federal Reserve can begin cutting interest rates. But that's the good news. The bad news is perhaps that was already priced in. The market is already expecting interest rate cuts, and that's why we had a muted reaction from the markets today.
In earnings news, Intel shares tumbled about 12% to a 6-week low after the company gave a revenue forecast that badly missed estimates as it plays catch-up in the AI race while also dealing with a weak PC market. Shares of chip manufacturing tools maker KLA Corp dropped more than 6.5% following a disappointing third-quarter revenue forecast. American Express shares jumped more than 7% and hit a record high after the credit card firm forecast a higher-than-expected annual profit. Visa declined more than 1.5% after the world's largest payments processor's tepid current quarter revenue growth forecast. And shares of Apple fell 1% ahead of its quarterly report next Thursday. The iPhone maker and Intel were among the stocks weighing the most on the S&P 500.
All right, well, moving away from Intel for now, well, the U.S. Federal Trade Commission ordered OpenAI, Microsoft, Alphabet, Amazon, and Anthropic to provide information on recent investments and partnerships involving generative AI companies and cloud service providers. The move comes after deals between a small number of big players raised antitrust concerns. Here's more.
US watchdogs are taking a closer look at OpenAI. The Federal Trade Commission said Thursday it had ordered the ChatGPT maker to provide details on recent partnerships. The move also covers AI startup Anthropic and tech giants Microsoft, Amazon, and Alphabet. It comes after deals between a small number of big players raised antitrust concerns. The orders will now allow regulators to scrutinise the inner workings of the firms involved to see if they hurt competition. One legal expert said it was a message to companies that Washington is watching and ready to act. The companies now have 45 days to respond. Microsoft promised to comply, but said all its deals with OpenAI were meant to promote competition. It's been pouring billions into the ChatGPT maker. Google said an inquiry would shine a light on firms that were less open than it is. There was no immediate comment from the other companies affected. Last June, the FTC published a list of its concerns. It identified access to data, talent, and computational resources as key areas, and vowed to use all its powers to tackle anti-competitive behavior.
All right, let's move into other news from around the world. A set of 6 sneakers worn by NBA legend Michael Jordan is about to hit the auction block on Sotheby's on February 2nd in New York. Michael Jordan wore the Air Jordans in the final games of his 6 career NBA championships. Sotheby's estimates the collection will fetch between $7 million to $10 million. Take a look.
We are standing in front of the Dynasty collection, which features one shoe from each of Michael Jordan's championship clinching games throughout his career. So the first three-peat, 1991 through 1993, and then his second three-peat after retirement in 1996 through 1998. Michael Jordan actually, after each of his championships, took one shoe off and gave it to the Chicago Bulls director of PR, Tim Hallam. And so this is that collection. It's the first time anything like this is ever coming to auction.
All right. Worn sneakers there likely to fetch as much as $10 million. Moving on, archaeologists in Denmark have found runes inscribed on a blade that dates back almost 2,000 years, which would make it one of the oldest inscriptions found in the country to date. The blade was discovered in 2021, but the inscription was only found in 2023. Here's more.
Know what they mean, but I think maybe it's just an ornament. It's an ornament that we know. Yeah. It was here for like one and a half year, and one of our very good conservators were cleaning it, getting all the rust off it, the corrosion, and in that process she saw on one side of the blade there was a very fine ornament, and on the other side, even more interesting, she saw a little runic inscription, and that was fantastic found. It says something like Hirila, and what does that mean? Well, it's a note from the earliest language we know from the Scandinavian area, and if you try to translate it, it means something like, the closest we can get it is like something like little sword.
Well, that's all we have time for on this edition of World Business Report. We'll be back tomorrow with another episode.